interesting. All right. I want to hear from you what your takeaways from what stood out to you the most from this conference, because it feels like in terms of the investor reaction, it seemed like I don't want to call it a flop, but there wasn't much to move the needle, I think, to what we know about. But what did you like, for instance?
Yeah, morning, Diane. Thanks for having me. Yeah, you're right. There was a slightly underwhelming reaction, but I think the series of announcements were well in line with the usual Nvidia playbook. That may be part of the issue, that people are becoming quite accustomed to what Jensen Huang announces. But with the new Blackwell Ultra chips, it's the obvious evolution of that family. And he also flagged up the roadmap as he always does, because obviously Nvidia has a load of OEM partners who need to know what Nvidia is planning. And so he talked a bit more about the Rubin family and then the upcoming Feynman family. That's obviously going out quite a long way. But I also thought some of the software announcements were very important, and they kind of point to another defensible moat that I think Nvidia is building.
Which software announcements did you think were the most important?
They announced this thing called Dynamo, which is kind of a software stack for inference that other companies can adopt. And the important thing there was that inference is becoming a much bigger market than the training market that kind of made Nvidia's name really in the stock market. So this is where you use AI to make predictions and make decisions, and now increasingly to take actions. And so that reasoning in the inference stage is really important. And I think last year they announced this thing called NIMS, where they're kind of packaging up microservices, and now they're building on top of that with Dynamo.
I do think that was interesting when he talked about solving the evolution of AI. It's been around for years, but then going from, a learning model to, as you talk about, the inference model, and then him saying in terms of the roadmap, next we'll see more robotics AI. And, in terms of some of the notes I saw, the learning problem that AI is meant to solve, and the idea being that we want AI to learn at superhuman rates, and then how do you scale all of this? So how do you see the role of NVIDIA in meeting just the evolving needs of inference and reasoning heavy AI workloads?
Well, I think they're in a really interesting position because obviously, as the primary provider of high-end GPUs, and I think they've got a pretty good runway in that market as being the dominant provider. They are the go-to company for that. And then if you build this, add this software stack on top of it, as we moved, as Jensen was saying yesterday, we moved from generative AI, and let's remember that was only November 2022 when ChatGPT came out. This thing moves so quickly. Right. If we move from that to agentic AI, that puts a lot more pressure on AI infrastructure. There's a lot more chip cycles it eats up as it does reasoning, rather than typing in a simple text prompt to ChatGPT and getting a text answer back. As this thing is reasoning and doing deep research and then making decisions based on that and producing content and then taking action. So this idea that agents can actually, software agents can take action and create and perform tasks. That is a lot more compute intensive. And guess who's going to provide the compute for that? It's going to be Nvidia, and it's going to be Nvidia for a while yet.
I cautioned investors in January that Nvidia shares should be handled carefully because the tech company's valuation left virtually no room for error. Despite the fact that the company appears to be operating at full capacity, I came to the conclusion that Nvidia shares might not be a great investment because its strong growth for years to come is already priced into premium valuation. But what about now? As of this writing, shares have dropped roughly 13% since that article was published. Has the stock's significant haircut made shares appealing? Unfortunately, Nvidia stock's valuation still seems excessively high. One thing Nvidia continues to do well is grow, as sales and profits skyrocketed in the company's most recent quarter, its fourth quarter of fiscal 2025. The growing demand for Nvidia's data center graphics processing units, GPUs, which control the market for AI accelerators, is a major factor in the company's soaring revenue. While Nvidia's whole fiscal year revenue climbed by an astounding 114% to $130.5 billion, its fiscal fourth quarter revenue jumped 78% year over year to $35.1 billion. Earnings have been strengthened by this strong growth. In its fiscal fourth quarter, Nvidia's net income increased 82% year-over-year to $22.09 billion, or $0.89. Given the company's recent explosive growth, shares may not appear that pricey, as the stock is currently trading at approximately 40 times earnings. However, a closer examination reveals two significant dangers that may call for a lower price. To begin with, Nvidia's growth seems to be slowing down significantly. For example, the company's fourth quarter year-over-year revenue growth rate of 78% is lower than the 94% growth in the quarter that ended 3 months ago and the 265% growth in the same period last year. The gross profit margin is another problem. Costs could increase as Nvidia battles to keep its technical leadership as competition heats up and the supply of AI chips catches up to demand. Additionally, if price becomes more crucial in a market that is becoming more and more competitive, prices may decrease. In order to do this, Nvidia's gross profit margin dropped to 73% in its most recent quarter from 76% in the same period last year. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
When you get the chance to sit down with one of the most important business people on earth, Jensen Huang, the founder, president, and CEO of NVIDIA, you take as much time as they'll give you. Even though the stock has come down from its highs, it's still pivotal right now. So we had lots to talk about. Take a look. Now, we are trying to figure out whether AI will always be derivative. When I put in a question, in the end, it scrapes everything. But it scrapes everything. I want new. I want something original and not derivative. Will they be able to put it all together and actually suggest that this would be a better way to look at it?
It turns out that all of that foundation knowledge is just foundation knowledge. What we really want the AI to do is to learn how to solve problems, learn how to reason, apply rules, apply knowledge, break a problem down one by one, step by step, and solve problems. That's intelligence. But you can't teach an AI that skill of solving problems. You can't teach AI reasoning without first having a foundation knowledge of what are numbers, how do words work together, what's vocabulary, what's syntax, what's grammar, so that it could learn some basic knowledge. Once it has the basic knowledge like we have AI today, notice how quickly we're teaching them how to reason.
Right.
And so it's learning how to reason. It's learning how to solve problems. It's learning how to solve math problems, geometry problems, prove theorems, prove logic. It's starting to learn those things by itself. And so it's really fantastic.
Well, this next level, even now, when you look at a deeper search from GPT, when you look at Grok, they have opinions.
Yeah.
They're thoughtful. They're not yes men anymore.
Well, they'll argue with you.
Right.
Yeah.
That's happening now, though.
Yeah, it's fantastic. And
how did that? Did you know it would be happening last year?
Well, I'm in the industry, so we see progress. And
you're in the kitchen.
I can tell you that AI is going to progress very quickly over the next several years, and the answers that it provides, it will be surely more accurate, surely much more contextually relevant. And it'll be able to answer and solve problems that are quite useful to us.
What can our nation and our government do to further what you're talking about?
I think that our country should also invest in AI. We should, of course, be talk about the importance of the technology, apply regulation where it makes sense, but also invest in using AI across the country. In every
Well, why don't we have a strategic AI reserve? We have one for something as meretricious as Bitcoin.
We should at least build the AI infrastructure so all of our scientists in the United States can use the AI infrastructure. And however it comes about, whether it's a strategic reserve, but the country needs to invest in an AI infrastructure.
Now, when we talk about this, we almost immediately talk about the Chinese and almost a Sputnik-like race in 1957. Are we being too too small-minded, and we shouldn't be thinking about the amount of business you do with China. Maybe that things are much further along than that mentally? Are we constraining ourselves with these discussions about politics and tariffs? Are these too small?
I think it's safe to say that we can't hold any country back or anyone back in advancing and developing intelligence. And surely AI is just digital intelligence.
Okay.
And so I think everyone is going to develop it. If everyone's going to be developing it, let's make sure that they develop it on American technology, American architecture, and the American standards. And so that's what I would advocate. And then secondarily, I would say, let's make sure that we are creating the conditions and investing in a way that allows our country to be far, far, far ahead. And so everything that we can do to speed up our advancement, everything we could do to speed up education here, startups here, economic development here using artificial intelligence, we absolutely.
Nvidia's earnings per share growth rates may drop sharply if the firm continues to experience declining revenue and shrinking margins at the same time. Nvidia's value, at 40 times earnings, is predicated on remarkable performance over the next 10 years, not just the next few. This is not a given, but it is a possibility. It makes sensible to wait to see if shares fall to a price low enough to more seriously price in some of these risks, because technology businesses like Nvidia are notoriously unpredictable. Although still remarkable, Nvidia's growth is waning. Additionally, the company's pricing power may erode due to increased competition in the AI chip market, further straining its margins. Today's multiple may appear even more stretched if revenue growth continues to slow and margins continue to shrink. Naturally, it's also important to take into account how much of Nvidia's present success is due to the exceptionally hot AI sector. At the moment, Nvidia is in control since demand for AI chips is significantly more than supply. However, such dynamic will not endure indefinitely. Although they still have a long way to go, other semiconductor titans are catching up. And when they do, the landscape of price and profitability may change significantly. This is not to imply that Nvidia is not a remarkable business. Yes, it is. Whether it's a wise investment at the current pricing is the question. Regretfully, I don't think the risk-reward trade-off is compelling at this cost. Waiting for a better entry opportunity or exploring for alternatives at a more affordable valuation would be the better course of action for investors seeking exposure to AI. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
When there was this DeepSeek issue, your stock took a $600 billion hit. I tried to reach you. I was told it was quiet period, that we could have easily explained that this is actually good for NVIDIA.
Yeah.
Why not have said that during that period?
We were during a quiet period.
But you still came out 2 days before. It was 25 days, and then you did it in a video 2 days before.
Well, next time you should contact me directly, and I'll come out and explain it.
Well, because it's a good thing.
Yeah. R1 DeepSeek was a fantastic thing. And the reason for that is because R1 is the first open sourced reasoning model. What makes R1 incredible is that it reasons. That's why the answer is so good. And it breaks the problem down step by step. It asks itself while it's thinking. It comes up with several different options for the answer. It might actually verify that the answer is correct. It solves a quadratic equation, takes the number, plugs it back in, and makes sure that it actually solves the equation. And so it's a reasoning AI. This reasoning AI consumes 100 times more compute than a non-reasoning AI.
And that's you.
It was exactly the opposite. It was the exact opposite conclusion that everybody had. And it actually consumes 100 times more computing.
Well, it's kind of amazing because the people are threatened by quantum. Quantum may use 1,000 times more compute.
Well, we're going to have to go help all the quantum computer companies, and this is going to be the first conference at GTC where we have a quantum day. And so all of my friends in the quantum industry are going to come, and we're working together to create classical quantum hybrid computers, because a computer can't just be quantum, and we like quantum to be able to accelerate many algorithms. And so creating a classical quantum computer using this architecture we call CUDA-Q, it's being adopted by the
2 years, 5 years, 10 years?
Well, I'm not making any more predictions.
No, right.
Yeah,
And I didn't mean to put you on the spot then.
Yeah, but I do know that all of our colleagues are working as fast as they can. I know they're making excellent progress, and we're working with everybody to accelerate the developments of quantum. But right now, we're $150 billion of AI infrastructure into trillions of dollars we have to go build. And so we have partnerships with BlackRock and Microsoft, and we're going to go get the supply chain and the infrastructure ready, upstream as well as downstream. And the demand is really incredible.
BlackRock reached out to me this morning to say, look, this is incredibly important. BlackRock, they were talking about a 1 gig data center, 40 to 50 billion. Disney reached out to me today. Cisco, talked to GM, CrowdStrike. These partnerships that are eye glaze over partnerships, when you have the 18 that were announced yesterday that I counted, are all incredibly significant for big companies that trade publicly that want me to know how important what you're doing is with them. But no one seems to understand that there could be 20, 30 things that you're doing.
We announced several things yesterday, and let me make it very simple this way. We're building AI infrastructure for the cloud. That everybody knows. Right.
That's true.
That's true. Everybody knows that. They're just delighted that all of a sudden AI reasoning is going to require 100 times more computing, and the demand is incredible. So that's AI cloud. What we announced yesterday is that we're going to take AI infrastructure into 2 new industries. One is enterprise IT. Half of the world's capex is in enterprise. Enterprises, how
it's
the economy.
It's not consumer people.
It's not consumer. It's enterprise, and it's the IT department of enterprise, and so we have to help them integrate AI into the world's companies.
Right.
And so our partnership with Dell and HPE and Accenture and ServiceNow and CrowdStrike and all these great companies. DDN and NetApp and Vast and all these great companies that we're working with are going to reinvent the enterprise IT with new AI infrastructure. And then the third growth opportunity for us now is AI for robotics. Before you have robots, you have to do AI for robotics. They have to be smart.
Right.
And so that's going to take mountains of infrastructure as well. And so we now have to build AI infrastructure for 3 industries: for the cloud, for enterprise IT, and for robotics.
Well, in the end, that's the world.
This is, we're going to be the foundation for
the world.
The world, hopefully, yeah.
One company?
Oh, we have
years ahead?
We have tons of partners. Look at us. Just about every company in the world's, just about every company in every industry is here. It's incredible. We have car companies, healthcare companies. Of course, the entire computer industry is here.
Nvidia CEO Jensen Huang revealed a number of planned product launches, including the next-generation graphics architectures Vera Rubin and Blackwell Ultra, during the highly anticipated keynote address at the GPU Technology Conference, GTC. A Citi analyst analyzed the developments in a note to clients on Thursday, concentrating on the potential impact of Nvidia's disclosures on other chip industry participants. For memory AI chipmaker Micron Technology, the release of Nvidia's future Rubin GPU, which has 50% more high-bandwidth memory, HBM DRAM, than the current Blackwell generation, is seen favorably. In a note, Citi analyst Christopher Danley stated that the new Rubin chip will have 50% more content than the current Blackwell generation, with 288 GB of HBM4 DRAM. Since Micron's HBM gross margins are estimated to be about 70%, we think this is positive news for the company. The independent research company TrendForce has updated its Q2 2025 DRAM price prediction from a 0% quarter-over-quarter change to a 3% 8% increase. Better inventory dynamics are the basis for this adjustment, which Danley sees as more positive news for Micron and supports the idea that prices would rise beginning in the second quarter of 2025. Additionally, Nvidia revealed its next-generation networking solution, co-packaged optics, CPO technology. However, since Nvidia's CPO is not anticipated to be available until the second half of 2026 and Broadcom, a leader in the networking sector, had already introduced comparable technology in March 2024, Danley does not believe this will have an effect on the company.
How long do you think its dominance will hold? I mean, it talked about demand for Hopper was from 1.3 million at its peak, 3.6 million for Blackwell. So it's been a clear leader. How long do you think it will hold its pole position, especially when you think about the hyperscalers developing their own chips?
Sure, I think Nvidia, that is, have got 18 to 24 months at least in a very similar position. And when you think about the hyperscalers, what have they got and who are they selling it to? Well, they obviously are developing and have developed their own silicon, but that is primarily being sold to digital natives, back to the tech industry itself. This is yet to cut through to banking or healthcare or manufacturing or something like that, because obviously they don't physically ship the chips; they rent the access to them. And the companies using that access a lot of them are the AI model makers and other tech firms.
And then when you speak about other tech firms, we know they have a strong relationship with, say, Microsoft, Amazon, et cetera. Do you think their continued growth story hinges on the expansion, you mentioned, other sectors like healthcare and beyond?
Yeah, I do think it does. Nvidia hasn't got a lot of vertical industry focus. Healthcare is one of them, and obviously transportation is another one. And with self-driving vehicles. But I think they do rely on partners to get them into these other markets, and I think that will continue. There could be. I've certainly been here at GTC and heard the executives here asked, are you going to verticalize this? Are you going to verticalize that? And they're not really committing to doing that. And I think that is, they know these couple of other markets very well, and I think they're going to rely on partners for a while yet before they branch out into these other vertical industries.
Who do you see as being the closest to playing catch up to Nvidia?
Well, obviously, as you said earlier, the hyperscalers in the kind of the mind of observers are going to be seen as main competitors. But obviously, AMD has GPUs. Intel is obviously going through its own issues that are well documented. So in the short term, as a pure chip company, it's AMD. In the broader sense, it is the hyperscalers, because they are offering both the silicon, even if it's just for rent, as it were, but also the software layers that I was talking about earlier. They are playing in that area. Some of them, like Google, obviously in some ways invented generative AI. These companies have a lot of expertise, and also much larger companies. Nvidia is quite a small company in terms of the number of employees, and so they have a lot more resources to throw at these problems. So I'd say that the hyperscalers overall, and then AMD particularly from a chip perspective.
Yeah, but AMD was expected to be a closer number too. So far, that hasn't been the case from the pure play perspective.
Furthermore, the analyst predicted that Broadcom will continue to gain from the industry's shift away from Nvidia. By 2028, Broadcom's custom ASICs, which are much more cost-effective per application, are predicted to take about 25% of the $380 billion AI accelerator total addressable market, TAM, with GPUs making up the remaining 75%. This is because hyperscalers are increasingly creating their own accelerator chips to optimize total cost of ownership and lessen their reliance on Nvidia. Danley adds that conventional server suppliers like Advanced Micro Devices and Intel may suffer slightly as a result of Nvidia's developments in the data center industry. According to Nvidia, businesses will need to upgrade their hardware, which accounts for 50% of global data center capital expenditures. We still think that Nvidia and accelerated computing will take a larger share of the data center market. This, in our opinion, is a slight disadvantage for established server manufacturers like AMD and INTC. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kevin Green's looking at the charts for us. KG, we're trying to hold in there. A bit of a dip In the last 10 minutes, though, it lost about 35 points in S&P futures.
Yeah, a little bit of aggressive selling after the press conference, and usually we actually do see this type of reaction. Either it's a nice little flush to the a pump to the upside after the conference, especially if we've heard something that's been bearish, and then the opposite when we have these really excessive runs to the upside or downside here. What is actually very interesting though is the volume is actually fairly light today, Oliver, across the board when you're looking at equities. I mean, I would not even be surprised if we actually have lower volume today than what we had yesterday, even though we have the event risk today. That's kind of where we're at. So light volume, liquidity kind of got drained out of the market for that press conference and the announcement. That's not out of the ordinary right now. And options volume for the most part is coming up a little bit light. But that rejection right around 57.15, we kind of highlighted this morning, 57.20 could be a potential area of resistance for the market. And it looks like we got fairly close to that and then rejected here. 56.60 is a key area for us to be able to hold. Any type of breakdown below that, you're starting to look at around 56.20 to 56.10. Do I believe that we could get down there? Anything's possible. It seems like there's still more excessive call buying that's taking place. The big risk is the unwinding going into the close. The last 15 minutes can be pretty much a make or break. When I mean this, a make or break when it comes to how good the candle actually looks like here today. But we are seeing an intraday bounce. If we go to the levels here, we actually are continuing to keep this megaphone pattern that we have on the 5-minute daily. So yes, we had a flush to the downside here, but we held up where we needed to, around that 56.80 level here. And so if we kind of go back up, test that 5,700 level, maybe we have some pen risk there. If not, and we break down to that megaphone, that's where you get concerned that we might see even a greater flush to the downside here. But we still have some wiggle room, once again, down to that 56.20 where you get really concerned. But decent little pop here today. This doesn't have to do with options flow. I'm actually very surprised to see this type of reaction in equities and then the opposite reaction in treasuries. So you would think that they might balance out a little bit. Maybe you'll talk about that on Risk Radar. But that's kind of throwing me off a little bit because the fixed income market right now, treasury market right now is calling the Fed's bluff. The aggressive buying of paper, given the summary of economic projections, I would say is actually more hawkish than dovish. And we did see treasuries actually look more of a risk off tone with flows going into treasuries. But the equity market has this relief bounce, and maybe they were expecting something a lot worse than what was projected here. But it just seems like there's a massive disconnect, in my opinion, for treasuries and equities, where we should be trading in a yield higher, equities higher environment, not this yields lower, equities higher. That means that we're a little bit more dependent than I would have suspected or expected here.
Well, it definitely complicates it. Right. To your point, that was literally the risk radar from yesterday was looking for today to see stocks up from the Powell put, but also yields up and dollar up. So we do have the dollar up, which I think is helpful. It definitely complicates it, though, because the bonds, of course, have that wacky little feedback mechanism of 10 years where sometimes it's unclear if we're buying bonds because we're scared, or if we're buying bonds because the Fed's not going to do enough, or they're going to do too much. But I hear you in that recently the correlation has been yields up, stocks up. So it's a little bit messy in there today. So if we go to equities just purely from a price action standpoint, if we kind of drop the causality with bonds, a problem to be solved another day. It seems like your analysis is that we want to finish strong. We want to get through some of these ranges to really kind of release tension to the upside. I mean, couldn't we still describe this as kind of a short squeeze? Is that still sort of the one of the ways to describe it?
You can. Okay, so if we go to that the open interest chart where we look at a longer time frame. So this looks like a remarkable pop here today, right? And rightfully so, but we're pretty much at the same levels that we saw on Monday. And actually, it's looking like the same candle. True. We still rejected the gap. We actually tested the gap today. That's something different. That's something new. You would have expected us to continue to go through that gap and try to test 57.30 before seeing a meaningful rejection here. But we're still kind of in this wedge pattern that I actually highlighted earlier this morning, and we haven't officially broken out yet. We still have that gap. We still have the 200-day moving average. We have breadth actually expanding, though. So would I put it to say that the bulls actually have it in their favor right now for the last couple of trading sessions? If we are able to close at these levels, I would say yes, but they still have a lot more work to do, and they're not at the primary short zone in my opinion. Just looking at the technicals, you would really like to come back and really test some of these key areas to the upside, and we just have not done that yet.